Hey everybody, welcome to another episode with Thrive TV and Casa Real Estate. Today I am here with your friend of mine, Oliver, the founder of HomeScore Solutions. He's been in the business for nearly 2 decades and he is a wealth of knowledge. He's been a loan officer and a debt collector in the past. So today I want to just hang out with Oliver and pour into your lives in regards to how to build your credit and how to fix your credit. So Oliver,
yes.
Thank you so much, first of all, for agreeing to this interview and this teaching. I know it's going to be empowering and enlightening to a lot of people. And so let's talk about, tell us a little bit about you. And today we're going to aim at empowering people, educating people on 2 main things, right? One, if people, maybe they just got their citizenship or they're looking to build their credit, they don't have anything negative, but they're just trying to build it up. And another group of people who maybe they went through a hardship. You're gonna talk about different hardships and what can they do to fix their credit. So again, thank you so much, and let's talk about it.
All right, well, Jacob, it's a pleasure. Thank you for having me. Well, good morning. Like Jacob said, I am the founder of HomeScore Solutions. I have been in the credit industry for over 2 decades now. And with that said, let's go ahead and dig into my brain. Let's pick my brain and let's get you some answers. So let's start talking about the first topic, which is how do we build credit? You're young, or like Jacob said, you just got your citizenship. You want to move forward. You need to understand this, okay? So building credit, it is by far a lot simpler than restoring or repairing credit. So the first thing we want to talk about is when you start with credit and you start applying because you have no credit history whatsoever, chances are you're going to get turned down and declined, and it's kind of depressing. It feels like you're swimming up against the current. But there's a couple of simple tricks to do that. First trick, Jacob. If you have a family member, your mother, your father, uncle, somebody older usually, with great credit history, ask them to add you as an authorized user on one of their best credit cards, okay? I'm gonna tell you, that's how I started with my credit. My mother helped me out. She added me on a credit card. She co-signed for a vehicle for me. That's how my credit began its journey. So, authorized user.
Now, really quick, and again, it's gonna be interview style, so I'm gonna ask some questions that I feel like some people might if they were here, they'll wanna ask.
Right.
So one of the questions for you, Oliver, is there a downside to somebody, a family member, adding them on their credit, and maybe then they mess up their credit? What are like your thoughts on that? Is there a downside to this or not?
There can be. So first of all, the person that is gonna add you as an authorized user, there's no downside to them. They're not gonna get a ding on their credit. Their credit card is not gonna decrease or increase their limit. Nothing's gonna happen to them, okay? The downside for the person that is being added as an authorized user, you have to make sure that that person that's adding you is responsible, doesn't max out their credit cards, and pays on time, because then that history is gonna jump aboard yours, and you don't wanna start off with negative history, okay?
That's great.
Rule of thumb, try to see if they have a credit card that's at least 2 to 3 years old for that history. Make sure it's not over the 30% threshold of the limit they give you. Say, for example, it's a $1,000 credit card. Try to make sure they're under $300. That way, that score rises quickly. And it usually reports within 45 to 60 days on your credit report.
Love it.
Yeah.
So what else can people do to build up their credit, aside from getting somebody to add them to the credit card?
Okay, another simple way, go to your local bank or go online and enroll for a secured credit card. Okay.
Mm-hmm. What are the ups and downs of that?
So the ups, secure credit card, they usually report faster than a regular credit card on your credit report, which is what you're looking for, and they usually report to all 3 bureaus. They are going to ask you for a small deposit based on your credit score. It could be anywhere from $49 up to $500, depending on what they qualify you for. But the good thing is, most of these credit card companies, after a 6-month trial period, they will reimburse you your deposit and it becomes a regular credit card.
Nice.
It's one of the simplest way to do it.
I love that.
Yes.
Now, so let's just say they go and open a secure card. Let's just say it's 500.
Okay.
They still have to abide by the rule of don't put more than 30% of what that limit is.
So Jacob, there's a little gray area in there. And it really depends on how you see your credit. For me, as a credit expert, I see my credit as an asset, okay? Meaning that I utilize my credit to do certain things. For example, I have credit cards that give me cash back. I'm gonna use them. Meaning that everything that I'm gonna pay for in everyday life, I'm gonna put it on that credit card, but I'm gonna make sure I pay it off at the end of the month because I don't wanna pay interest on the stuff that I'm paying for.
Gotcha.
So I use them for that. As far as this goes, you can use your credit back and forth as much as you need to, but know that the minute you get past that 30% threshold, your scores will go down.
Got it.
Okay.
Perfect. So what's another thing that people can do on this side of the spectrum?
Well, we can apply for second opportunity credit. For example,
Okay.
Cons is a great place. If you don't know Cons, they sell electronics, appliances. FAMSA is a great place too. Their second opportunity, meaning they're willing to take a chance on you, even if you don't have perfect credit. Now, like everything is, don't go to one of these places and buy a $3,000 TV. You know, buy something small. Remember, we are working towards building the credit.
Yes.
So buy something small, $200-300. They're gonna give you a contract. You're gonna pay the same amount every month, which is called an installment. And we'll talk about installment versus revolving in a minute. And just pay it. You don't have to pay it any faster. Just pay it exactly how they give you the time frame and the monthly payments.
I love that, man. I love that you brought up that don't go buy something expensive because that's gonna count when you go wanna get a loan for a house. That's gonna count as debt.
Correct. And since we're talking about that, I'm gonna break down. So the credit bureaus utilize an algorithm to determine what risk factor you are. Okay, that's what it comes down to. The credit bureaus acquire information, they collect information, and they figure out what kind of risk factor are you for a bank, a lender, or somebody that's willing to take a chance on you.
Gotcha.
So the first thing I would like to talk about is credit, and the word credit in the word Latin means trust. And that's something that we all forget. People are trusting you
That's powerful.
to pay things back.
Yeah.
And that's very important because in the world that we live in, especially in this country, our credit is as important as our job and as our health. It really is.
You're right, and I love what you're saying because a lot of employers, will look at your credit.
Yes, sir.
To see if you're trustworthy, to
Correct.
see your discipline and consistency. Even insurance companies will run your
Insurance,
credit to
yes.
see how consistent you are. Because if you have really bad credit, they're thinking, well, this guy's inconsistent, maybe gets in trouble a lot, and so we gotta charge them a higher premium on their insurance because they're not that consistent and disciplined.
That is correct. That is correct. And even though for most of us, it's not really that, we're irresponsible or we're not consistent, usually a hardship happens. But at the end of the day, that's the risk factor they look into. And even some dating sites, believe it or not, they check your credit now.
Come on, hey, I like that.
Dating
Man,
sites,
you
don't want to marry into bad credit right away.
Yeah, because that just tells you some patterns, right?
Exactly.
I love that. I gotta say this. One of the things I love about you and your company, Oliver, is that you intentionally focus on empowering people who have the goal to buy a home, right?
Yes. Early in my career, I realized there was a gap or a niche that we needed to take care of because I don't think anybody wakes up and says, I want to have bad credit on purpose.
It's good.
Okay, I don't think that really happens. But at the same time, when you have a goal in mind, which one of the biggest purchases anybody will make in their life is the home, it tells me that it's somebody that's motivated and willing to do what it takes to get out of that hole and move forward with their lives. So I decided to focus a lot on home buyers and business owners, because when you are a business owner, trust me, you will need your credit.
That's good. Thank you. Okay, so Oliver, what is there anything else that people can do in this realm, or do we move into now?
Well, I want to break down the credit score in the easiest terms possible, because if you learn this moving forward, you're gonna realize what you need and need to do and not do. Okay.
Okay.
So if again,
I'll write it down.
Jacob has way better handwriting than me.
That was a good
So
idea.
we're gonna come up with how credit scores are calculated.
Mhm.
So Jacob, 35% of your score.
Okay. 35%.
And this is the biggest one. This is the one we have to pay the most attention to, and believe it or not, is the one that people take care of the least because they think it's no big deal. So 35% of your score is your payment history.
Okay.
Okay. What does this mean? It means that if you have a $5 monthly credit card payment or a $1,000 car payment or a $2,000 house payment, if you ever pay one of those late, just once, that's 35% of your score, Jacob. It can drop your scores anywhere between 40 to 70 points, depending on what it is. And consumers don't know this. They think, I'm just gonna pay late once. Now, when I am talking about late, it is a 30-day late. We're not talking about 1 day late or 2 days late. The cycle is 30 days.
Gotcha.
So please stay on top of your payments. And the same thing goes. You pay on time, your scores go up. It's 35% of your score. Does that?
No, that's powerful. So the thing you guys gotta get out of this payment history is pay on time every time.
Every time. And that late payment will stay on your credit report for 7 years. 7 years, Jacob.
So think about it.
Okay? 30% of your score.
30%.
Yeah. This is amounts owed or balances.
Okay.
So this is where two things come into play. Number one, understand that when you have a credit card and you max it out, that's 30% of your score. So if I have a $1,000 credit card and I am at $1,000, my scores will go down. They will fluctuate. Okay. Number two, I go buy a brand new $50,000 vehicle before I buy my house. And we've seen it, right?
Yeah.
Your scores are going to drop. Your debt to income is going to go up. There goes your loan. You got to be very careful with that.
Perfect.
Okay. And last but not least, if you have outstanding collections, the amounts you owe in your collections is 30% of your score. So if you have $20,000, $30,000 in collections, that's why your scores are plateauing and they won't go up.
Wow. Perfect.
Okay. 15% of your score. This is your credit history or the time you've established your credit. Okay.
Okay.
So the older the credit, the more established, the more points you get. Okay. My 13-year-old sister can probably take care of a credit card for 1 or 2 months on time. But then you go look at my mom, she's had that same credit card for 40 years, has never been late. Guess who's gonna have the stronger credit? So you wanna establish that credit. You do not wanna close out credit cards. Let's say you're not using them. Okay, don't use them, but don't close them because there goes that credit history. You're deleting credit history from your credit score. So be very careful with that. Okay? And that's also where the authorized user comes in because this person has 4 years of credit history, piggybacks on yours, it gives you an immediate score.
Perfect.
Okay? 10% of your score is types of credit.
Okay.
There's 2 types of credit, Jacob. There's revolving, which are your credit cards. It revolves around your spending, and it has the biggest impact because it takes more responsibility to take care of a credit card. And then there's installments, like houses, cars, furniture, meaning when you sign that contract, you're gonna pay the same thing every month for a certain period of time. Okay? You wanna have a healthy balance. For every one installment, you can have up to 3 credit cards or revolving accounts. That's a healthy balance.
Gotcha.
The minute you have 20 credit cards in one installment, you're out of balance, it's gonna affect your scores.
Gotcha.
Okay?
Perfect.
And last but not least, 10% is your inquiries.
Okay.
And everybody knows this. If you pull your credit 10, 20, 30 times, your scores are gonna go down. Why? The bureaus wanna make sure that you're not out there trying to get all this credit that you can't take care of. So as your scores go down, it prevents you from getting more and more credit where you're gonna get in trouble.
Gotcha.
So keep your inquiries at a minimum. When you are applying for a house or a car, there is a 30-day grace period where you can apply several times and it'll only count as one inquiry because you're shopping around for the best deal. But, just...
So
Keep it up.
one of the questions here, Oliver, is the following: is there a way for people to find out about the condition of their credit without putting like a hard pull, like a hard inquiry about their credit?
Definitely. definitely.
What's one way that they can do that?
Okay, so we have a lot of tools now. Most of our banks usually have a credit app that'll give you a breakdown of what your credit is looking like.
Mm-hmm.
But understand that score is not accurate. Okay?
Gotcha.
For you to get an accurate credit score, you have to pay the bureaus. You have to, because that's the business they're in.
Mm-hmm.
Credit Karma is another tool that a lot of people use. It is free. It is a good way for you to keep track of your accounts and what's going on with them. But again, don't go by their scores because their scores are not accurate. I would say on average 20 to 30 points off, give or take.
Gotcha.
There is monitoring services that you can enroll. You will have to pay a monthly service. And I believe those are the best ones because they're closer to what the actual credit score is. And they don't ding you. They're called soft inquiries. They won't ding you in any way. And then you can do your free annual credit report. You can pull that once a year. You can request it to the bureaus and they will send it to you for free.
Mm-hmm. Perfect. I love it, man. This is great information. I hope you all use it. If you're looking at building your credit, obviously you can do it, but if you need somebody to hold your hand and guide you step by step, make sure that you reach out to the team at 817-856-2552, and we'll put you in touch with Oliver, and we'll take it from there to help you. Again, you can do it yourself, right? But if you're like me, like I have coaches and mentors for everything, right? And so because I need that accountability, I need to stay on track. There's a lot of noise out there, and I want to make sure that I stay laser focused on it.
There is a lot of noise. There's a lot of misconceptions or information that is not accurate.
Mm-hmm.
Not just because people are trying to, guide you the wrong path. Some people just don't know.
Mm-hmm.
And I think everybody has a profession for a reason, and they become an expert in their field.
That's great.
And our consultation is 100% free, no charge to you. We'll talk to you, we'll review your report, and if it makes sense, we'll love to help you.
And a huge thing is that we trust Oliver. That's huge. And when you work with us, we're gonna send you to people who stand by their work.
I appreciate it.
So let's talk about the second side of things, and this is again people who might have gone through a hardship or are walking through a hardship. Why don't you talk a little bit about some of the people that come to you to help them on this side of the spectrum? What are some of the things they walk through or are walking through, and then what are some of the things that you do to help them? So this is fixing credit.
Yeah, this is fixing credit. Okay, so all walks of life. I have the single mom, and I have the professional athlete requesting assistance. One of the biggest things that I see is divorce. It's a
Mm-hmm.
sensitive subject, but divorce tends to ruin finances, and obviously credit is part of the finances.
Mm-hmm.
Two incomes turn into one. We have a car together, we have a house together, the judge said this, the judge said that, and most people get in a rut. They might be sad or depressed. They're like, I'll deal with that later. Right now, I just got to get back on my feet.
Mm-hmm.
So divorce is a very big problem that we see. Okay. One thing that I do want you guys to know, and this is huge misconception, it does not matter what the judge decides on the divorce decree. Meaning, hey, you have to pay for this, you have to pay for that. The creditors don't care.
Mm-hmm.
If it's under your name, you have to pay for it. You can't tell the creditor, hey, the judge decided that my ex-husband was going to pay for this. They don't care.
Mm-hmm.
So if you don't pay it, it's on you because you signed for it. Okay, so that's a big thing. Second thing, illness.
Okay.
People get sick, kids get sick, bills stack up, medical bills take a big toll on families. So that's another reason that a lot of people come to me.
Gotcha.
Loss of a job,
Okay.
especially, in recent years, we've seen the economy go up and down.
Yeah.
So loss of a job is a big deal, obviously, because when this happens,
Mm-hmm.
you're gonna think about keeping a roof over your head and food on the table.
That's good.
Credit will take a back seat, but once you get back on your feet, then
Let's work it
that's
out.
when they come to me so I can get this taken care of as quickly as possible. And I've worked with a lot of veterans, a lot of people in the service.
Mm-hmm.
They get deployed,
Mm-hmm.
they come back, their spouse. their significant other
Mhm.
didn't take care of their credit, and that's something that we also deal with a lot. So I would say this is
For the
basically
most part.
the most part. We do have some people out there that just They don't know, and they mess up their credit.
Yeah, and it's one of those things, right? That some of us, like I can tell you for myself, like I didn't grow up knowing this, so I had to, crawl before I walked. So I had to make a lot of mistakes.
Yeah.
A lot of you know my testimony, and it's like, when I wanted to turn around my finances, it's because I was making good money, but I was spending all of it every month. So I was like house broke and car broke, right? And then sadly, sometimes we make those mistakes, right? Sometimes, like I know a lot of people that come to us that want to buy a house. They're like, hey, I want to buy a house, but my student loan is $100,000, $200,000, and $50,000. We see it all the time. So sometimes you didn't do this on purpose, but you just find yourself saying, how did I land here? And that's where you need to come to Oliver to get the guidance that you need so that you can make wise decisions to start walking it out and end up, having a good credit to buy a home or to open a business or something like that.
Yeah, Jacob. I mean, very, very big thing. And if you don't mind, I'll tell you a little bit about my story, how I got involved in this industry. So, growing up in a different country as an immigrant, coming here, learning that credit is such an important thing, we were just happy the lights were turned on. My parents couldn't teach me things they didn't know.
Come on, man.
They couldn't teach me about credit because they didn't know about credit.
That's powerful.
And that's something that hopefully when you learn this, you start talking to your kids at an early age how important this is. Okay? I've talked to my little sister, I've talked to, friends and family, letting them know how important it is to start early.
Yeah.
So down the line, you don't get in trouble. So that's one thing. So yes, credit is very important, very, very important. And it's something that should be talked about at an early age.
Perfect. So people come to you and, whether we didn't intentionally land there or whether they're walking through one of the hardships, what are some of the things that you can actually do to help them fix their credit? Okay. And again, some of these things maybe they can do, but it's like, what's the difference between what they can do and what you can do, how you can guide them, how you can obviously protect their time and energy by doing the right thing?
So the analogy I usually make when people ask me, why can't I do this myself? Mm-hmm. Well, you can. These laws are put into place for consumers like you and me to do this ourselves. But just like you take your car to the mechanic, because if I go to YouTube, I can probably figure out how to do certain things.
Change the brakes, for example.
But am I willing to put my time, learn, experiment, and then most likely have to call the mechanic down the line to fix what I did?
Right.
That's what it comes down to. So whenever you hire a specialist, like myself or my company, you're paying for the knowledge of the know-how, how to do it once and for all, you're paying for all the back-end work, because believe it or not, guys, it's a lot of work. And if you're like me and you don't like paperwork, then don't even go that route. A lot of paperwork, a lot of research, okay? And then also you want somebody to back up their work. That's very important. When you pay somebody or you do something, you want to make sure that your money and your time are being backed up.
Yeah. So and that's one of the things that we'll touch base on, right? Later on towards the end is how can people do diligence to hire the right person?
Correct.
Right? And so let's talk about what are some of the things that, again, you can do to help people.
Okay. So the very first thing we're going to do is we're going to go through a very brief consultation.
Okay. Free, right?
It's all free. Yes.
Okay.
Consultation is free.
So I'll write that down when you talk to them.
So what I want to find out, number one, is what is your goal or objective? Why is this important? We consider ourselves a boutique shop. We're not a huge company that is just turning numbers and whoever wants to enroll can enroll. Mm-hmm. We're very selective because, kind of like a doctor, I can't cure every single illness.
Oh, that's good.
Okay, very, very important. And number two, to cure an illness, you have to be ready to give up what's causing you to be ill in the first place. Okay? So we are going to go through a consultation. I want to find out your goals. I do want to find out how you're currently doing financially, what stability you have.
That's good.
And then also, we're going to talk about what got you into this place in the first place, what got you your credit to go bad. Mm-hmm. And then we are going to talk about looking at your credit report to see exactly what damage is on there. Again, the analogy of a doctor. Do you need a pill? Do you need major surgery? We need to find out.
And you need to know, do they came in with fever, high blood pressure? Or?
Exactly. Are you currently going through something
Are you diabetic? Like
exactly. So that's very important. A lot of companies don't take their time to do this. They will enroll you without even talking to you.
yeah.
And unfortunately, they're setting you up for failure because if they don't know what's going on behind the scenes, how do they know the outcome?
Man, I love what you're saying because basically you're saying there's credit repair companies out there that don't care, don't do an assessment, they won't look at your situation, and it's like you going to a doctor and before they even check your pulse or everything, and they just give you like, oh, here, take all this medicine.
Let's go to surgery.
Yeah, take all this, and it's like, you don't want that. So that's a huge red flag.
It is a red flag. Again, I'm not bashing the different ways that people do this.
Mm-hmm.
It's just like everything, there's this way and there's a better way.
Perfect.
And we don't want to set up our clients for failure because at the end of the day, it's my face, it's your face.
Yeah. So free consultation, you're gonna pull credit, you're gonna analyze their situation. Let's just say that the person decides, hey, yes, I wanna go with your services. What are some of the things that you can help people fix, and what are some things that is like this we cannot even take off?
Okay, great question. So once we go through this and we decide that we can assist you, my team and I will sit down, analyze the credit report, and come up with solutions.
Mm-hmm.
I'm gonna present different options for you. Very important, Jacob, we do have set prices.
Okay.
And this is really, really good because a lot of companies out there are commission-based, so they're gonna charge you basically based on what they think they can charge.
Mm-hmm.
So there's no set price. One guy could be this much, the second guy can be this much, and they have the same amount of issues. So we do have set prices, we do have payment arrangements and payment programs.
Okay.
So the financial part should not be something to deter you from doing the program because we've basically covered all the corners.
Mm-hmm.
Once we get to that point, we're also going to instruct you on what you need to do, which is very minimal. I mean, you don't really have to do much. We're going to do all the legwork or all the dirty work ourselves.
Mm-hmm.
Basically, pay your bills on time, obviously. No new collections. Very important. No applying for credit while you're going through the process.
Mm-hmm.
2 reasons for that. I don't need new inquiries to ding your report. Okay? And I don't need you to go out and get trigger happy and start shopping around because, again, Jacob, being in real estate, will tell you that so many times people go and make a major purchase and there goes their home loan. Happens a lot.
Yeah.
So
that's kind of what they have to do, even if they hire.
Basically, pay on time, don't run your credit. If I tell you, hey, we need to pay down this credit card to this limit, that's something else that we're gonna do.
Okay.
Or if we find that you're an authorized user on somebody's card and they're not taking care of that card, hey, let's remove you from that because it's affecting you more than it's helping you.
Gotcha.
Okay?
So pay down debt.
Mm-hmm.
Okay.
Okay. So one way that I love to explain to people how credit scores work, Jacob, is I use the hot air balloon analogy. Your credit is like a hot air balloon. The positive credit that you acquire is the hot air going into the balloon to make it rise.
Wow.
You take care of it, you pay on time, you do the right balances, it's gonna rise. But if we get to the point where you have too many collections, too many late payments, too many derogatory accounts, those are like the sandbags around the hot air balloon. So it doesn't matter how much hot air you put into it, it's gonna plateau.
Oh man, that's powerful.
And that's where I come in. I gotta get rid of those sandbags. And with our process, since we're not just doing the basic dispute that credit repair does, we actually take it further and we do an auditing process where we go to the source of the companies, hospitals, courthouses, whoever's paying the bureau's report. Once we remove something from the report, it's out of their life. It's gone. It'll never appear again. They cannot resell it or re-report it. And if you owed money, I just saved you a lot of money in collections that you never have to pay back. So that's a big deal.
Okay. So some collections you can take out. Is that right? Because again, I want us to explain to people some of the things that you can possibly take off.
Okay.
And then what are some of the things that you're like, hey man, these are things that
Just can't touch.
yeah, can touch.
Government debt.
Okay.
We cannot touch government debt. We cannot go after unpaid student loans or student loans in collections. Okay.
Mm-hmm.
We cannot go after unpaid tax liens or tax problems. And we cannot go after child support, unpaid child support. Okay.
Okay.
These are all things that you have to take care of your own. There's nothing we can do about it.
Because, and if they come across a credit repair company who's like, oh yeah, we can take this off.
They're not being honest.
Okay, so let's make sure, because I want to make sure they have it. So
Government debt,
unpaid child support, student loans, right?
student loans,
Okay.
or tax rates.
Loans, tax liens, anything else here?
That's pretty much it. Another thing that we run into a lot, say for example, you come to me and you're currently paying your car late, your credit card late, month after month. There's really not much that we can do to raise your scores if you keep paying late.
Yeah.
It's something that has to stop in order for us to be able to assist you.
Yeah.
You have to be in a financial position where you're caught up to everything. You know, all this stuff is from the past, you're ready to move forward.
Mm-hmm.
But if you're currently going through the hardship and you're paying stuff late, don't waste your time with any credit repair company. Even if they accept you, your scores won't go up until that stops.
Yeah, so one of the first things when you really want to buy a house and get ready is get the discipline to pay your stuff on time. Because again, you see that right here. If he's doing everything that he can and you're still paying late, it's ruining your payment history and most likely your balances. You're getting late fees and that is adding up, so it's hindering your balances that you have. So it's really a cycle and a pattern that you gotta break through.
Yeah, I mean, at least do the automatic payment, minimum payment on your credit cards. That way, if you forget, you're still paying and they won't count you as late. Whenever you get more money, pay it off, pay more on it.
That's great.
But at least don't be late.
I love that.
Don't be late.
That's a great tip right there. You guys need to write that down.
Yes, very important. What was the other question?
So the other question is, this is kind of what they need to, even if they hire you, things that they need to keep doing, right? Pay on time, don't run credit, pay down debt.
Correct.
Things that you can't take off is government debt, unpaid child support, student loans, tax liens.
Correct.
So now let's talk about some of the things that you often help people delete or negotiate, or help them to, like you said, clear things out of that
Correct.
basket of that has the air balloon.
So let's talk about how it works, because a lot of people, when they talk to me, they think, this sounds too good to be true. How can this really be?
Yeah.
So one thing that I want you guys to understand is the credit reporting agencies, they collect data. They gather data. They utilize a very old system. If anybody is old like me, remembers MS-DOS, Microsoft DOS, they still utilize some of these programs to receive the data from all these companies. So a lot of mistakes are made, okay? That's where we want to capitalize on this. And the other thing is that if anybody wants to put something on your credit report, they have to be able to validate it and back it up with documentation. Just because I'm willing to pay the bureau saying Jacob owes me $1,000, Jacob has the right to say, wait a minute, who are you and why do I owe you $1,000? I have to come up with documentation validating what I'm reporting. Same thing goes with these guys. Now here's the good news. When you have a charge off, say for example, you had a Bank of America credit card. You couldn't pay it, you were sick, you went through a divorce. They had a certain amount of time to collect that money from you, Jacob. When they can't, they do what's called profit and loss and write off your debt up against your taxes at the end of the year. And you heard me right, they write it off. They've been satisfied on your debt.
Got it.
Okay, Bank of America has been paid. And a lot of you guys see it. You say, why is this collection being reported 3 different ways from 3 different companies? Well, they wrote it off, it's a charge off. Now to make more money, they'll sell your account to a third-party collection company. No, they don't own the collection company. No, the collection company didn't buy the right. They sell your account pennies on the dollar to make more money. That's why they're so eager to offer you settlements. You know those letters you get in the mail? Hey, call us now, we'll settle out for this. Yeah, anything they make over what they paid, they win. So that's very, very important.
Got it.
So once it gets to this position, now we're gonna find out if the company that purchased the debt, are they legally registered to pursue you in the state that you reside in? Are they legally registered? Are they paying both federal and state taxes? Because a lot of these collection companies don't want to do that. Do they have all the documentation to back it up? And most importantly, do they have the original signed contract with your hand and ink?
Wow.
They don't have warehouses full of documents, people. They don't.
That's
so
powerful.
when they don't come up with these documents, guess what? the account becomes invalidated, it has to be removed by law. And they have a certain period of time to investigate and respond.
Powerful. So delete, what do we call that? Delete,
Delete derogatories, delete, so
Okay.
things that we work on, collections, charge-offs, late payments, repossessions, foreclosures, public records, very important, public records.
what am I missing? 'Cause you went,
Collections, late payments,
okay, late payments, okay.
medical bills, hospital bills. That's something that I see almost everybody at one point in time or another will have a medical bill on their credit reports.
Okay. And you can delete those,
So
depending, or?
yes.
Okay.
So one thing that happens a lot is you go to the hospital, you have an emergency, your insurance company takes the bill,
Mm-hmm.
but the hospital or doctor sends the collection already to your credit report. They get paid down the line from your insurance company because insurance companies, they take their time, but they don't update the credit bureaus, and that collection's still on there. And you're like, well, my insurance paid for it. I see it all the time.
Wow.
Okay. So medical bills, yes. Believe it or not, medical bills are one of the, I don't want to say easy, but we're very successful with medical bills because there's two laws that counteract each other.
Perfect.
Yes, sir.
Man, that's huge, man. The way you've been breaking it down. So I know that we often have questions that come from our home buyers. And so I'm gonna be asking Emmanuel to kind of shout some of those questions that people have. So Emmanuel, why don't you ask some of the questions that we get often from our customers?
Yeah, I think one of the biggest things that you guys touched is many people have medical bills, and the question that we get asked is, what do they do? One of the cases is, and this is not medical bills, but this is small collections. Is it better to pay off small collection debt or
fight it?
What is it better? And how does that benefit or affects the credit score?
Perfect.
So let's repeat the question because they can hear us
Okay.
better. So the question
And let's
is,
say, like, for instance, we had a customer, small debt collection, cell phone bill, for instance,
Right.
$300.
Okay.
so small debt collection, $300. Do they pay it off, or do they fight it with you? What's
Okay, man, and that's a great question. So I will never ever tell a client or a customer to not pay their debts. Okay, please understand that. But I will tell you what happens when you pay off your debts, and it is a double-edged sword. Okay, double-edged sword. A lot of times when you pay off a collection, let's say you call them, they're willing to offer you a settlement. You are extremely happy. Hey, I'm paying half the bill. They will not remove the account from your credit report. It will remain in collection status. It will now show settlement accepted, paid less than the balance owed, but the real problem is you just updated the date of last activity on a negative account. Meaning, let's say this debt was from 2010, you paid in 2020, from the day you pay it off, it's another 7-year cycle. You updated it. You woke up a sleeping dog.
so?
It can drop your scores, and a lot of times it drops your scores. I'll give you the perfect example. I had a couple that hired me about 4 months ago. They came to me, hey, we heard amazing things about you, we want to enroll. Great, I got them enrolled, did the consultation. 2 months into it, they asked me to stop the process. It's like, hey, Oliver, stop the process. We cannot have any more movements on our credit report because we're trying to get a house. I was really confused because they hired me to do a process and they asked me to stop. Well, their loan officer decided to tell them to pay off collections to make this go faster, supposedly, because they were in a hurry, they were desperate, they wanted to get their house right there and then. They went up against my knowledge and my advice. They started paying off collections. They called me 2 weeks later saying their scores dropped 150 points and they were mad at me. I told them, first of all, you hired me, you didn't let me do my work, and you went ahead and did what I told you not to do. Nothing against loan officers, but everybody has their specialty.
That's good, man.
And they messed up their credit and their loan. So again, it's a double-edged sword. A lot of loan officers use the what-if simulators, and it tells them, hey, if you pay this off, it's going to increase your scores. They're very, very close and very accurate, but sometimes it actually doesn't work and it actually drops their scores. So again, I'm not saying don't pay off your debts, but know what happens if you get to that point. Now, if you want to pay it off make sure you get a letter from the collection company, before you give them any money, saying that they will remove the account permanently after you pay it off. If you don't get that letter,
Don't even do it.
it's gonna stay on there. It's kind of like paying your speeding ticket to avoid a warrant, but it's still on your record you were speeding, and your insurance company will find out while it's paid off. Same thing works.
I love what you're saying, because it's like, if you're up against something like that, where
Yes.
it requires more specialty, more skill, you know, always consult with Oliver or with an expert that really knows what they're doing, especially when it comes to credit. Because sometimes we get all these questions and we tell people like, hey, you know, we're not trying to mess you up, so let's just get you to an expert in their field. So what's another thing that people ask us often, Emmanuel?
Yes, we have a lot of cases where people have foreclosures and they want to know how long they stay in the credit and if there's anything they can do. And the thing is, most people want to buy a house, right?
Correct.
Yeah.
So can you give us some insight on how foreclosures affect the credit score
Definitely.
and the chances?
So let me, because again, they can
Yes,
hear.
yes.
So talk about foreclosures and bankruptcies. People are asking all the time, hey man, I went through a bankruptcy 2, 3, 4, 5, you know, years ago, or I had a foreclosure, you know, can they still move forward to buying a house?
Okay.
How does that affect their ability to do that?
Okay, so when it comes to foreclosures and bankruptcies, as you know, the lending industry always changes the rules, so you have to be up to date on what's being required.
That's right.
For example, on bankruptcies, the bankruptcy will stay on your credit report for 10 years after it's been dismissed or discharged, whether it's Chapter 7 or Chapter 13, okay? With my prior knowledge, when it comes to conventional or FHA, I believe you have to be at least 2 years out of the bankruptcy to be able to qualify. Again, I don't know if it
Depending on
changes,
underwriting.
because it changes on underwriting, it changes on companies.
Depending on really what the government, you know.
Basically, and also you can get a loan even if you're going through a bankruptcy, depending if it's a Chapter 13 or a Chapter 7. Again, that's a loan officer question. You have to make sure you ask them what you can and cannot do.
And different loan officers might have different answers because their
Different
underwriting
guidelines. Correct.
might be different. So I'm glad you're touching base on that.
Now, as far as removal of bankruptcies, if it has been discharged or dismissed, there is about a 50% chance to remove them. We get it done, but nobody, and this is very important, guys, and I want you to know this, nobody in my industry that is being honest with you will tell you that they're gonna remove something 100% unless it's identity theft or credit fraud. If you come to me and you tell me this is 100% not mine, I will tell you 100% I'll remove it. But if at one point in time, at one point in time, if it was your collection, it was your late payment, it was your foreclosure, know that anybody in my industry that's being honest with you cannot tell you, don't worry about it, 100% we're taking it off.
Fraud, right?
Fraud, yeah, identity theft and fraud. Okay? Best example, let's say you commit a crime, you don't want to go to jail, besides running to the border, you're going to hire an attorney. And you're going to sit down with your attorney, and your attorney's going to tell you, hey, listen, between you and me, this happened, but if there's no evidence, there's no witnesses, and I'm a heck of an attorney that knows the laws and the loopholes, your chances are great that you're going to walk. But no attorney that's being honest with you will tell you, hey, don't worry about it. You committed that crime, you hire me, you're walking free. Same thing goes. So please keep that in mind.
That's great.
Okay? We have to be realistic.
Any other thing that we run into?
And the foreclosures, I'm sorry, I forgot.
Oh yeah.
When it comes to foreclosures will remain on your credit report from the day the foreclosure proceeding stops for 7 years.
Got it.
Okay? Can they be removed? Yes. They can be removed, but again, it comes down to a lot of factors, and I would never tell a client 100%. There's about a 50 to 75% chance of removing an old foreclosure. And know that the older the negative accounts are, the bigger the chance will be to remove them. If it just happened last month, I will tell you it's not coming off.
Got it.
Okay?
Awesome.
The last question that we have is, can I build my credit if I have bad credit? So meaning, how can people get a loan if they have bad credit? Is there anything that they can do to build a credit and at the same time like working through all those negative items? Is there anything they can do?
So the question again, so they can hear it better. How can people build credit when they're
Having bad credit.
Having bad credit.
Okay. So, best way for me to answer this is, can you build credit with bad credit? Yes, there's a lot of credit card companies that will give you a second opportunity. they're usually going to be very high in interest, or they're going to charge you a yearly fee, but they will accept you. And just like I explained it earlier, just because you get a bunch of new credit, let's say you get 3 new credit cards and you're paying them on time, it will help you a little, but if you have too many negative items, you're plateauing. You're never going to get high enough. You're just going to get to that point. So you have to address the negative items. There's 3 ways of addressing it. Number 1, pay it all off. Make sure you get a letter before you pay them off, because if you don't get that letter, you're wasting your time and money.
Right.
Number 2, wait 7 to 21 years for the stuff to drop off, and cross your fingers that you don't get sued, because that's something we haven't talked about, Jacob. A lot of these companies can legally pursue you, okay, if the statute of limitation is still active on the account. In Texas, the statute of limitation is 4 years, meaning that from the day that company did the charge off, within the next 4 years, they can take legal action against you. Now here in Texas, we are protected. They cannot dip into your accounts, they cannot go after your taxes, they cannot go after your property. You cannot get arrested for owing a debt. But you will have a public record, and with a public record on your credit report, you cannot get a property. No bank will give you a property with a public record, because they could put a lien on your property.
Got it.
So very important, so know that. I lost my train of thought. We were talking about.
No, yeah, so we're now talking about, so you addressed bankruptcies,
Bankruptcies and
foreclosures.
foreclosures.
So now the other thing that, as we get ready to wrap up this interview, one of the things I want to talk about, Oliver, is how can people do diligence on a credit repair company, right? Because
Yes.
there's all kinds of fraud going on out there of bad credit repair companies. How can people do diligence and make a wise decision? What questions should they be asking? What red flags should they be looking for? Take a little bit of time to empower
Definitely.
people on that.
It's a very, very big issue in our industry, because we get a bad rep because a lot of people are not responsible on how they do this. So first thing I recommend is research the company. Go online, look at their footprint. Do they have a website? Do they have a physical location? Can you meet with them? Right?
Yeah.
You want to know that, because a lot of people do this from their house, their garage. They come up with a name.
Yeah.
Okay? So number 1, make sure of that. Number 2, find out if they're legally registered. Are they a legally registered company with the Secretary of State? Are they bonded? Very important. A bond is an insurance for all our clients, meaning that if tomorrow a tornado destroys my office and all my files, my bond will pay that client out if the work wasn't completed. So make sure they're bonded, very, very important. And I think the most important thing, Jacob, is will they take their time to give you a consultation?
Yeah.
Will they explain to you what works, what doesn't work?
Yeah.
Will they let you know up front, hey, I don't know if I can help you. I don't know if you fit the profile of somebody that can be helped. Because if you go to a company website and they just tell you to enroll, put your information in, there you go, and they never even looked at your credit report, how do they know what they need to fix?
Yeah.
Very important. Go through that consultation, make sure they can help you out.
That's good. And then a couple of things to add to that, I think it's check the reviews on Google, Facebook. I mean, obviously there is always
Reviews are very important, but if you look at anything, look at your phone company, your light company.
Right.
I mean, you can't keep everybody happy all of the time.
That's right. But if the majority or a good amount of
A good portion.
look for patterns, right?
Yes.
Look for patterns. So for example, maybe they told you, oh, I'm gonna sit down with you every month or every 2 months, and they never follow through with that, and everybody's commenting on that, then you're like, hey, I spotted a pattern. They're not doing what they're saying.
Right.
So just look for patterns, and again, just be diligent, meet with the people personally. You know.
And please, very important, make sure there's paperwork involved. Don't hand people money just on a word on a handshake. Make sure there's paperwork protecting you and protecting the company.
That's good.
Okay? We have a money back guarantee in writing. We guarantee our work, meaning the work will be done. We have a portal for our clients where they can keep track of the work that's being done in real time. So make sure there's paperwork, because a lot of times I get people calling me, well, I don't really believe in this because so-and-so referred me to this person and they took my money and I never saw anything. I said, where's the paperwork? Oh, I didn't sign anything. Right, well, I mean, how could you trust somebody with your finances and your credit and you're not signing anything?
Right.
Very important.
That's good. Well, y'all, thank you so much for spending a few minutes with us, paying attention to this video. I hope that it was constructive, that it was helpful, that it was empowering for you and your family. Again, if there are questions that we didn't get to cover, make sure that you email us, that you text us, that you're asking questions. And again, we're more than happy to put you in touch with Oliver. So make sure you call our team to 817-856-2552, and we're more than happy to connect you. So stay tuned because the best is yet to come.
And Jacob, one last thing.
Yeah.
We're fully bilingual, don't forget.
Yes.
Very important.
Así que si nada más hablas español, llámanos de todos modos, podemos ayudarte, podemos guiarte y darte las herramientas, recursos, información que tú necesitas para reparar tu crédito o para construir buen crédito.
Y dale tu teléfono en español para que no se...
Sí, el teléfono es 817-856-2552. Así que llámanos, mándanos un texto, un correo electrónico y estamos ahí para servirles y ayudarles.
See you all next time.